Well, speaking of housing, the red-hot housing market has fizzled out. According to data from Redfin, the value of the market has shrunk more than 2008 levels. Yahoo Finance's Dani Romero joins with the latest on the housing front. Dani, quite the turnaround.
Yeah, that's right. The value of the housing market has really taken a hit. And we saw that in the late half of 2022. The total value of homes has dropped about 5% or $2.3 trillion. And that's according to Redfin data. And that is the biggest drop in percentage terms that since the housing crisis in 2008. And so currently home buyers are faced with those elevated home prices as well as higher mortgage rates. So that's really, lending itself into less competition in the market and bringing down some of that pressure. And even we're seeing that in the median sales price. I mean, it dropped to $383,000 in last month, and that's down from its peak in May. But the other side of this, though, Rochelle, I want to point out is that home prices are not collapsing. The total value of homes still sits higher at $13 trillion. That's more than it was in February of 2020. And so how much homeowners have really lost depends on where they bought their home. The biggest declines were seen in those pricey cities such as San Francisco, San Jose, Oakland, California, and New York. But those that moved to the boom towns, pandemic boom towns like Florida, they're seeing some return on their investment. Florida, Tennessee, South Carolina, they saw an annual gain of 17% last year. But according to a realtor in Florida, the reason why the housing market is sustained in Florida is because of those that have moved from the northern region as well as the West Coast. Rochelle?
I mean, that certainly makes sense. And obviously a tough break. If you did buy in some of those expensive cities, you're probably not going to be moving anytime soon, which doesn't help inventory as well. And of course, while the housing market boomed during the pandemic, so did the home improvement sector. So what's happening there, and will it survive elevated inflation?
Yeah, well, let's just say we're not quite over those DIY projects, but we're definitely getting there. Demand has weakened. And according to data from John Burns real estate consulting firm, Google searches for discretionary home improvement projects are actually moving toward those 2019-2020 levels. Those wanting to do kitchen and bathroom remodeling projects have tanked. They're down 15 to 28% so far this year compared to those that are looking for replacement projects such as roofing and siding. And also a similar tone was expressed with Home Depot in their earnings call. The company anticipates demand to moderate. And, you have to remember that this is a market where customers are really price sensitive. So customers are spending less, and they've even swapped out some of the quality of the product to stay within budget. But some housing experts, especially in the home improvement section, say that, home sales is no longer a good proxy when measuring home improvement spending. Rochelle?
It's certainly getting more complex. A lot of these nuances creep in. People tightening their purse strings. Things are expensive. They're, putting off some of these improvements. Dani Romero, thanks so much.